Do you want to present yourself quickly?
Yeah, hello, everyone. Very quickly, I know it's already late. My name is Brzezek. I'm CEO and founder of Crypto Finance. We are now part of Deutsche Börse Group. Before that, we're primarily based in Switzerland. We're a FINMA-regulated broker-dealer. We offer accounts as well for financial institutions. We provide from execution to settlement, clearing, custody, and some tokenization services for financial institutions who want to enter the space. So we are one of the partners, as Sandra mentioned, where banks can, instead of make or buy or build, they could partner as well, which I would recommend. And honestly, on your list with the makes, I would say in the next 12 to 24 months, at least 50% will stop the make and will partner, because it reduces the execution risk massively. And we're not in a bull market anymore where you can afford an expensive innovation team who can come up with big visions. I think it's much more about execution and reputational risk and what we heard on BCBS, capital requirements. It makes much more sense to partner up with someone.
Yeah, definitely. I would just start with the first question for you, Jan, because I was talking about the market environment, and I think a lot of things happened in the last couple of weeks. And one of it was in the US, the whole case around Binance. I think this is really something which affects the whole crypto market. What is your view on that? What actually happened there? Maybe you can describe that.
Yeah, I would say the past 12 months were not the best ones for the crypto space. So maybe you have seen that the CFTC issued an enforcement or a trial against Binance, which is the largest crypto exchange globally, which is definitely not good, right? We have seen last year that FTX disappeared, to put it in a nice way, and now Binance. So it seems like a very hostile environment in the US, and the US regulators are now really do legislation by enforcement, which is not good. I hope it will drive much more adoption in Europe, because with the European Union and the MiCA legislation, I think this is really like a well-balanced approach, and hopefully we will see more adoption here. But that the Binance got sued to lawful avoidance of US law and operating derivatives exchange, an unregulated derivatives exchange, is a heavy accusation. Yeah. And about you, Sandra, I mean, do you see now, with everything what happened in the past 12 months, do you see that banks or financial institutions are reducing the speed or even stopping the adoption of crypto?
I think at least it doesn't help, right? So, but as you said, we can see that they fall back in old behavior clusters, like telling crypto is all scam, and the whole FTX debacle was not really helpful, because we already thought we were on the point where we really declared, okay, crypto, it's a technology, it's a new asset class, and we had the feeling, okay, we are getting in the right direction. And then the whole FTX thing happened, and everyone was screaming again, crypto is a scam, and this kind of stopped a couple of projects, because this is what I said, like the reputational risk or the fear of losing reputation to when you enter the market is already quite high. So a couple of projects stopped, and what you said is that we will see from all these banks which actually declare to use the make solution, potentially we stop these kind of projects because they are super expensive. We are in the bear market. Banks are actually quite struggling also in the market environment. So it really affects also the banking projects. But we have a lot of institutions on the other side really looking into that space and understanding that they nevertheless need to build this kind of infrastructure. And that's why we still see movement, but it's still really careful. So I think everything is much easier in a bull market, right? But some institutions really understood that the bear market is also there for building infrastructure.
And I guess the focus shifts a little bit more to tokenization than to crypto. So 2023 is probably the year of tokenization use cases and less of crypto.
Yeah, we see much more use cases or questions or requests concerning the tokenization part, because they, as I said, they kind of moved a bit away from crypto and now focusing really on this regulated tokenization part, especially in Germany. We have a clear regulatory framework with the EWPG and the crypto FFV. So we see much more use cases there, but still you need kind of a custody solution, right? Even for that. And my question is more like, what do you think are, or you as a custodian or a custody provider, you should know, or you for sure know, what are like real risks of this custody business? Because we always talk about the reputational risk, etc. But what are the risks of this custody in general? So if you can say that, or take the fear maybe from some institutions.
I'm not sure if I can take the fear away. I think a lot of financial institutions are underestimating the risks which come with it, or they talk about the known risks, but they completely miss the big risks, like the cybersecurity risks or threats. A lot of banks say, yeah, we do custody already, we know how it goes, right, how it works, but in the end, it's exponentially higher IT technology topic and risk than with traditional securities. So there it's really, you need to invest a lot of money and hire the right people who can build you a resilient infrastructure, who really have a deep understanding of the technology, because just buying an IT, like a custody solution, doesn't solve it. You need to be able to operate it. The underlying blockchains are changing constantly, so you need to be up all the time and be aware of what's happening and what are the changes. The regulatory landscape is changing constantly, so just having the regulatory license or approval right now doesn't mean you still have it in 3 months. And then there are massive operational risks as well. And this is something where banks are not used to. They think that the core banking system they have or the IT infrastructure is secure, because I mean, it's a fact, they get hacked from time to time, but then they can just follow the money and see, okay, it got sent to this bank. They can call the other bank and say, hey, can you please freeze it and send it back? With crypto, it doesn't work, right? If it goes to an unknown wallet, you can't call anyone. So this is something where most of them are not up to speed, in my opinion, and that's why I think it makes much more sense to focus on the core capability of serving the clients and then buying in or working with sub-custodians, reputable sub-custodians who can help you with that. But for you, Sandra, what is a potential use case for a private bank? And is there just one use case, or are there several use cases?
Yes, I think the first use case or the first business case they can build is really this access topic, like pure execution only. So you don't get in an advisory situation, which is really, really important. So you are not under MiFID II. And even with this pure execution only thing, I think you are quite flexible in them. I cannot say that loud actually, but in the cost situation you will give to your client, because first of all you are solving really the market lag we have. And people are willing to pay for security. And I think this is a really important point. And if you look at the cost structure of crypto exchanges, they are not cheap at all, right? So I think this is like pure execution only is the first business case.
And paying 1% is still better than losing 100%.
Exactly. And then you can build on that because, as I said, you have the infrastructure and then you can actually build like maybe DeFi products or staking or whatever is possible then. Or you can really offer your clients access to tokenized security. So really to the capital market infrastructure then. Because it's nearly the same infrastructure you need. Of course, there are some things which differ, but then you can build on that. So you can start with a plain execution-only offering in the crypto space and then build products. And you can also start to think about maybe have a digital asset unit in your asset management, which starts to hire experts and portfolio managers, which can manage, for example, a fund or discretionary portfolio management or whatever, and then start to enter this space. So nobody expects bank to advise on crypto assets. Nobody expects like a whole product range, but you can start with a really good business case, especially when it comes to the wealth management, may not apply for the retail customers, but when we talk to the wealth management, it is actually a first really, really good step to do.
And a lot of people will think, yeah, okay, we just need custody. No, we need trading, we need settlement, we need reporting, we need compliance, and investment management. Very often, the simple thing is just to offer clients exposure to it. They don't need to have the bitcoins in the wallet with the bank. They can buy an ETN, ETP, or a fund or whatever. Sometimes they say, hey, I don't want to care about what the strategy. I don't want to read all the white papers. I want to have someone like a portfolio manager who can then decide, and then for that you need products, and then you can skip the whole compliance piece because the client doesn't have exposure to the underlying asset. He's just buying a share of the fund or the product. Yeah. Do we have any questions, or maybe from the podium?
Yeah, before we...
My microphone is now on, all right. There's currently no online question. I would have one, and the audience is, of course, always invited to ask you questions if there are. Otherwise, we still have some time.
And there's a question.
There's a question. Yara, would you be so kind? Thank you.
Hello, my name is Obay. Bitcoin and Ethereum podcast here. I was just wondering, I mean, the main idea of cryptocurrencies and like people like me investing in cryptocurrencies was having a sort of digital money where you don't have to trust people. Now, you're like telling us about your custody service. What do you do different than, let's say, FTX, Terra Luna, whatever was mentioned before, where you would say you can gain the trust of us investors?
So I think we need to differentiate here, because when we talk about like the whole DeFi part, for example, right? It's nearly completely decentralized and the DAOs, etc. But at one point in time, at the very beginning, you need access, right? And you have two options. Either you trust yourself and do custody yourself of your private keys, or you trust someone else. And who's that someone else? It could be like the hot wallet, and you're trusting a wallet provider. You can trust a regulated custodian, or you can trust potentially your bank, which could be the custodian. And this is the important point, because at the one point in time, you need this access, and it needs to be as secure as possible. And if you don't trust yourself, and even that's why I'm talking about the wealth management, because we are talking about higher investment sums, you, in general, maybe don't trust yourself to do that. Or you don't even want to do it because it's too risky. So you will trust someone else. And it's basically, it's the key advantage of banks because they are the trustworthy partners in many, many other cases as well. So that's why they could have this advantage.
Yeah, I completely agree. I mean, that's the beauty of crypto. You can host it yourself. And I feel completely, even though I'm not a cryptographer, I feel completely safe to do it like I have money in my pocket, this amount, but I wouldn't store much more money on it because it's not just because of me, but I need to trust there's someone as well, the guy who built the hardware wallet, because I'm not creating my private key myself. So it starts there, and then I rather go to a bank who is regulated, has the processes and the expertise, and then that they do it for me. Especially what happens if I die, then at least my family would have access through the bank. So it's really about convenience and security. But that depends always on the use case, on the place where you are, right? In some emerging markets, I would agree that maybe doing it yourself is safer than doing it with the bank. Do we have any other question? Otherwise, we would have some questions.
Do we have Telegram questions? Real quick, stage direction? No. In that case, I'd have a question actually. Hearing all of this, and custody is an extremely interesting topic, but I always wonder, isn't there a giant target on the back of a custodian, security-wise? I mean, like all of the stakeholders kind of, I don't want to say they rely on them, but let's say the most of the attack vectors kind of go against the custodian. What measures can you take, maybe technological, but also operational, to relieve that burden a little bit?
Yeah, I would say the few points I mentioned before, it's about IT security, it's about regular audits, it's about proper segregation so that not somebody alone can prove transfers, but that you have a multi-sig scheme where different people from different teams need to approve something, and then you can add on. In our solution, you could have 1-hour delays, 24-hour delays. You manage colder and warmer wallets. So here you have more the transfer wallets, and then you have the cold wallets where it needs, as soon as you sign, it needs 24 hours until it gets released and signed on the blockchain. With that, you have additional security because you can always interact before that. I think it needs a lot of IT specific knowledge, and then the whole kind of policies around the process management, the operational resilience around it to make it really secure. And that's what concerns me very often from some people who are just selling a proper solution. Just because I can buy a Ferrari doesn't mean I can drive on a racing track, right? So this is what gets sold, but actually then people die by that.
And we also have an online question, and it's for Sandra.
Oh.
A long one.
Yeah, it's a long question. Yeah. Can you read it out real quick?
I can read it.
Oh, perfect.
Could the CFTC try to position its regulation area against the SEC to avoid the SEC to push forward to make all crypto projects expect Bitcoin a security with the Binance case?
You see why I couldn't do that live.
I agree.
Oof. This is a hard one. Against the SEC to avoid the SEC to push forward to make all crypto projects except Bitcoin as security with...
I think what we currently see in the US is a big mess, to be honest. It's not reasonably big or easy explainable. I mean, Gary Gensler is quite knowledgeable about the space, and he should know quite well how you could come up with a proper, balanced regulation. But In my opinion, I personally see it rather as like a political game to gain exposure, to gain a bigger oversight, not only for securities, but when you get tokens as well. What is it if it's a commodity token or derivatives? Is a token a derivative? Is it a security, and so on? And if the SEC would gain that, then they would expand their oversight substantially on the cost of the CFTC. So that's why the CFTC says it's all a commodity, so that they have the oversight. So this is something where I don't know why they do it. I mean, yeah, I see why they do it, but it's very bad for the ecosystem in the US.
Yeah.
All right, if you don't have anything to add, then I want to thank you very, very much for this interesting expert discussion. And thank you for involving the audience. I think that's worth an extra applause.